Stocks turn euphoric. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard, as the Ainslie Group celebrates 50 years. Today, welcome back Sam, who's been investigating some very interesting price action in the markets Friday night and into the weekend. How are you going today, Sam?
Good, Chris. Thanks.
On Friday, you wrote about Milei roasting the WEF and Trump lashing out at a central bank digital currency sort of approach that he really doesn't disagree that he really disagrees with. So, what's been happening in the global markets in the background of all that news?
Well, I checked the markets Saturday morning and I was pretty shocked. I almost spat my drink out because of this double top pattern we were all looking at. All the technical analysts were looking for. It looked like it was about to play out. Just got obliterated. The NASDAQ and the S&P 500 printed huge green candles on the daily and broke to all-time highs.
It's pretty impressive.
Yeah. So
So, do you think that really that, given the background of what else was going on at that time, the market's just ignoring that, or is it fueling from that?
Well, most of the positivity comes from news about semiconductor manufacturers. So, for example, if you look at Taiwan Semiconductor Manufacturing Company, they're expecting 20% growth this year. So, absolutely massive growth. And most of this is fueled by the need for these semiconductors for AI. So, the AI narrative apparently isn't over yet. It wasn't just hype. I mean, look at us. We still have jobs. There are still lawyers and accountants going to work. So apparently there's more AI to come potentially. But that was a really big surprise, and that pulled these indices, especially the NASDAQ, up very dramatically.
So it's really interesting around that AI narrative because, as you've said, we haven't really seen that impact yet. But I wonder whether that's something that's still building up in the background. Does it take a little bit longer? I mean, really, we're still only about a year into that sort of AI um, really becoming more mainstream. So, yeah, is this something we need to be paying attention to more in looking at the jobs market more generally? Like, do you think that the jobs market and other readings that you've been looking at there, are they stable for now, or are they stable long term? How do you look at all of that?
Well, yeah, the jobs market has been really stable. All the readings we normally look at look really strong. Of course, we've written about before how they fluff the jobs numbers and everything like that. At the end of the day, it's what the market reads and what traders do. It doesn't matter if something's a little bit, over fluffed or a little bit spiced up compared to what it really is. It just matters how the traders respond. But look, the jobs market looks fine. Everything looks fine. The stock market just broke new all-time highs. But other than that, the thing you have to think about is, I mean, AI, of course, earlier it was a little bit more on the hype side. It didn't really dig its teeth into the markets yet. So there probably is a lot more to come, just in my opinion.
Yeah.
AI is just going to keep accelerating. It's going to, probably keep helping markets. But the thing people need to decide for themselves is the Fed a benevolent charity, or is the Fed out to try to crash the economy and consolidate assets? So what is the Fed's real job? Are they out there with no ulterior motive to simply rescue the stock market and make sure everyone's retirement fund just keeps pumping, at the detriment of the currency for everyone else? Or are they inflating and deflating the currency to cause a big whiplash in markets, make people, default on their mortgages and then consolidate assets? That's the real thing people have to wonder. And look, if they're just out to save everybody, we could get that early rate cut, which seems to be fading from market expectations due to their continuous tough talk. So yeah, look, if they're out to help everyone, they might cut soon and then pump up all the markets. Hopefully there's minimal damage to things like people's debts and people's job security. But if they're out to try to knock the market down, then it might not take very long, because all they have to do is hold interest rates high, and that's it. Once something's held at a certain temperature, it starts to boil eventually. So they can still create a lot of damage in the markets by holding out.
That's a really interesting analogy too, and way to think about it, because from my perspective, I think that's what's called or is going to catch a lot of people off this year is this uncertainty around what the Fed will actually do. Because as you alluded to, there was a lot of hype about multiple rate cuts this year that's starting to potentially ease from the market's thoughts about what's going to happen. So that's one aspect. But at the other side of it, we've got debt and interest repayments that you go, well, how is that sustainable if we have effectively rates maintained at that high level, and then you have to pay interest obviously on the debt that's already out there, new interest coming in an election year with probably increased spending. There's so many elements at play here. So I suppose to wrap this up, my question to you would be, for your longer term 2024 outlook, where do you fall on what the Fed's saying versus what you think they'll do?
Look at historically, when we get interest rate cuts, we get a crash or
Yeah.
a large dip. So that's something I'm on the lookout for. And like we've talked before, it doesn't have to be some long drawn out thing. It could be really quick. We've had crashes before where a few months later, the president's bragging about, markets being in great condition. So all you need is that quick dump, and then the big guys can buy in and then send it up again. So that's that's all you need. You don't need to drag society through a multi-year or half a decade depression. That doesn't work out very well for governments who want to stay in power. What works well is a snap, neck-breaking decline, and then a huge rebound a week later, and
So
then selling at the top.
the short and sharp approach to that you think might be needed to sort of clear that market out, and then the Fed potentially could have it both ways.
Yes. Now that's if they're out to make a profit. I don't have any opinion on that. I have no idea. They could be a benevolent, charitable institution out to help everyone. We'll see.
I really like that. Yeah, it doesn't really require an opinion at this stage. What it requires us to do is to be alert, and that's what you're telling us to do. So, yeah, thank you for that as always, Sam. We'll keep paying attention to what's going on in those markets, but certainly big green candles to watch for the moment. So we'll see how they resolve.
Thanks, Chris.
Thanks everyone for watching, and we'll chat again soon.